We seem to have a directionless market that's lost at sea. Is it going up? Is it going down? There's positive factors, there's negative factors. You get switches in the market within 3 hours, sometimes less than that. It's just amazing. Is this the stagflation before the recession? Or is this the beginnings of the soft landing that's going to explode into a major bull market? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everyone, I'm Stephen Fox. Welcome to my channel. In this video, I'm going to talk about the positive and the negative factors driving the market, and then I'm going to show you a comparison of the major mega cap stocks that I think probably will make a good long-term investment if you can stand to ride out the coming turbulence. This is one of the most challenging markets I've ever seen. We have positive factors like factory employment and factory prices, and the factory PMI which usually indicates what's going to happen on the consumer price index to some extent, because the producers, if they get lower costs, they usually pass it on eventually to consumers. There's less factory employment. The prices are lower in producing goods. And so that should mean less inflation. Hallelujah. That was very good news. But then we got sort of a black swan event, a mini black swan event. Well, maybe it was more of an ugly duckling. The Arab OPEC plus, which are the Mideast, the Arab countries, and I think Venezuela is also included, plus Russia. It's called OPEC plus because it includes other countries. They announced that they're going to cut production by 1 million barrels. Okay. What's ironic about this is it's going to bring on less use of oil in the long run because people will get electric cars. More electric cars probably will be sold than would otherwise happen, simply because the price of gas is going to get so outrageous that they see the economy of doing that. And also, again, there's a good news story on the other side of this. The price of lithium is coming down like 30%. And so that's going to make batteries cheaper. And Tesla is also working on a next generation car. And they're going to build a gigafactory in Mexico, which the president of Mexico announced in February. And again, Tesla just keeps going and growing. And I think Tesla is a long-term play. You can buy it for less than $200 now. I don't know that you're going to be able to say that for too much longer. It all depends on how it rides out the recession. It could go lower, but if you're getting it below $200 on a long-term value basis, and probably within a year or two, it's going to be at 300, probably. You know, there is so much money waiting on the sidelines, waiting to jump into this market. And the ironic thing is that people like me that are getting averse to this market because you get tired of being just pulled every which way. We put the money into a money market and you're getting 4 or 5% interest rates on money markets and bonds. And of course, that increases the money available to invest when we hit the recession. So I think what's going to happen, my prediction in all of this is that I think it's like the Fed is the rider of the horse, the economy is the horse, and the Fed is trying to keep a spirited horse from going forward, and it keeps it from going forward with the interest rate hikes, and so it has to keep increasing the interest rates. If the stock market goes up, that's going to make them want to raise rates even more. And especially with the oil prices going up, that's going to make the inflation statistics look far worse. And so they almost have to do it. And they're going to be doing it in an economy that's struggling. And if we have more bank failures, I'm hesitant to short this market. I have the weird experience of buying small amounts of stock to short, like buying SQQQ, and then also buying TQQQ, buying a small amount and just watching which one is doing better to get a sense of the market. And I also bought another triple leverage inverse fund, SORTY, SRTY. SQQQ is triple leveraged on the 100 largest companies on the NASDAQ. TQQQ is a triple leverage bullish fund on the 100 largest companies on the NASDAQ. So typically, what I would do is buy TQQQ and buy SRTY, SORTY, and one's very bullish and one's very bearish. And I've seen times where they both go up or they both go down. That's not supposed to happen. But this is the strange market that we're in. The Fed closely watches a thing called the JOLTS, the Job Openings and Labor Turnover Survey. And it's been like 10.5 million for a long time. But recently it dropped to 9.9 million. So they are having an effect on employment, job openings. So that would seem to be doing some of the Fed's work and would be against their raising so aggressively. But I think the oil price is going to spike, and that's going to spike inflation, and that's going to force them to raise rates more than even they want to. One thing I was sad to hear was that Richard Branson's Virgin Galactic company is filing for Chapter 11 bankruptcy. So they're trying to get another buyer to buy it. And he was, I guess the point of what he was doing was he was trying to make it so airplanes could fly high enough that they could shoot the satellites into orbit. But I guess they had an accident and a payload of satellites didn't make it, or they got destroyed somehow, and so that was that would have propelled investment in what they were doing. And I think they were on tenuous enough ground that they couldn't withstand a major negative event like that. The mega caps have been relative fortresses of safety lately, although that's breaking down a little bit here recently. But my favorite stock amongst all of these is Nvidia, whose symbol is NVDA. It's the engine of artificial intelligence, and it's partly a fad, yes, but it's a trend that's going to be with us for a long time. And I see Nvidia as being the Tesla of artificial intelligence, if you will. I think it's going to have that kind of growth and that kind of influence. And as we look at the chart, I have Bollinger Bands around its price movement. and it's the Bollinger Bands are the expected movement, and it's been in the upper echelons of those ranges. Uh, I I funny enough, I don't think it's overbought because its relative strength is 67. The relative strength has to be over 80 for it to be overbought. But I do think the price is going to go down. And I think this is a buy uh, if it goes down to 250 or around two, at least in the 250s, because that's right in the middle of that Bollinger range. And I think we should get there fairly easily with even a modest downturn. We should be able to get that price. The other favorite, of course, is Tesla itself. Its price to earnings is 35. This is a stock whose price to earnings used to be in the thousands. Its earnings growth rate is 36. And they've got so much going for it, so many projects, that this is a good long-term investment. I think it'll be 300 in 2 or 3 years anyway. So if we just have to get through this recession or whatever we're going to go through first. I'd feel more comfortable buying it below 190. And if I could get it below 180, that would be a deal. And its relative strength is 52. It's right in the middle, so it's not overbought nor oversold. So it's again, it's hard to think. This is a great stock, but it's just hard to think about buying these mega caps when we don't know what's going on. But it's one to keep in your mind for when things do turn around. And when they do turn around, my prediction is it's going to be explosive. The other mega cap that looks interesting is Meta. And I think Zuckerberg has really scaled back his metaverse plans and is waiting for greener pastures or times when you have money to burn, which in a recession he will not have money to burn and he won't be able to fund the extra projects that the metaverse requires. But I think it eventually will be a thing. But they have such a strong basis to their business with Facebook, Instagram, WhatsApp, and Oculus that I think it's a good long-term play. And it's reasonably priced. 24 isn't that bad for a major mega cap like that. Looking at the chart with the Bollinger Bands around the price movement, the expected price movement of Meta, it's right in the middle of that band is 200, or virtually very close to 200. So if you can get Meta for below 200, and I believe there will come a time when you'll be able to do that in the coming months, it's a buy. Its price to earnings is 24, which is very reasonable, and it's right now it's at 72 as far as relative strength, which is getting close to 80. So it's getting close to being overbought, and I think we should be able to get it below 200, and that will definitely be a buy and something you want to hang on to. Please smash the like button if any of this has been helpful, because it really helps the channel. And I will keep trying to ferret my way through this market and let you know what my thoughts and observations are, so that maybe we can put together a plan to how to survive this very difficult market. I think its level of difficulty is really up there with the all-time most difficult markets that there have been. So that's all I have. Thanks for listening and watching. Be sure to subscribe if you haven't already done that. Hit the little notification bell, and I will plan to see you in the next one. Thanks.